Do your swing trading setups look a little bit like this setup on the screen, with a large stop loss and roughly targeting 1 to 3s? Can we actually implement some smart money concepts into swing trading in order to get more out of the positions? That's what we're going to be taking a look at in this video. Hi guys, and welcome back to the Social Traders YouTube channel. So today we're going to be taking a look at swing trading, and we're going to be having a look at the standard setups, the standard things that people look at, and then we're going to look at how we'd break this specific pair down and how we'd actually look to implement some smart money concepts to get the most out of the move to the upside in this case. So looking at this, we do have Euro Aussie dollar and we are on the daily time frame. Now, what we can actually see is the market is moving to the downside. We're clearly making a series of lower lows and lower highs at this point. So we can see here that we do have our previous high and we have our previous low on the daily time frame. Now, we can see here that we do kind of have this level that we have to come back to, and we also have this level down here. So naturally what the market's going to do is we're going to continue to break the low to the downside, and we're going to continue, pull back and continue down once more. Or we're going to see the market push back up into these highs here before pushing back down, or we're going to go and see price push back to the upside and start to create a reversal. Now, a standard kind of swing trading setup, something that we've seen time and time again on social media and YouTube, is that we see something like this where we have a push to the upside that breaks our high, we take a fib from low to high, and we look to trade off a rejection of the 78, the 61 or the 50% with a nice wide stop and targeting the high, something along the lines of that. And we can see here that that's a 1 to 4, which is perfectly fine. But we know that we can actually add certain concepts into our trading to get more out of the move. Now, just for the example here, I'm just going to play this out. And you'll see that price does eventually make its way all the way up to the highs there. And, we do go and hit targets for 4%. So again, there's nothing wrong with trading this way. It works and you can definitely be consistent. However, we do feel like there are some concepts and some things that you can add to your trading in order to get more out of the move. So if I just clean this chart up here and we start to have a look at price action again. Now, what we can clearly see here is, again, the market is moving to the downside. We do have a clear high within the market and we do have a clear low within the market. So we can see that we're actually trading within this range of that leg of price. Now, we can also see that the market has broken our previous low. So naturally, there's going to be something in this leg of price that created that. And again, it gives cause for higher prices, okay? So we know that the market can pull back to these highs at least, okay? So that's kind of the area that we will be looking to target in this specific move. Now, if we drop down onto the lower time frames, this is where we can actually have a closer look. Now, because I said we're making lower lows and lower highs on the higher time frame, we know that the market can just continue to do that. And we know that the market can just go and push to the downside, pull back, and then continue making those lower lows and lower highs. Now, the reason we don't just take a buy around these areas, or we don't take a buy after an engulfing candle, is because we need to see that shift in structure. And we can actually see here that the market did go and break our high to the upside. So that's a really, really clear sign that potentially things are starting to change, and we could see that relief and we could see that counter trend move back up into these highs, okay? So now what we can do is drop down onto the 4 hour and start to understand price action a little bit more. So we don't only just have smart money concepts within our strategy, we do trade patterns and we have a raw understanding of that price action as well. So if that does interest you, do check out our website. Now, looking at this, we can see that really strong push in one direction, followed by this clear correction. Now, when we're seeing a bullish impulse, we really want to see a descending correction in order for that continuation to the upside. And the same if it was bearish. If we saw a bearish impulse, we want to see an ascending correction followed by a bearish impulse. Now in this case, we've got a clear bullish push followed by a clear correction. So what we can then start to do is write on our structure. So we can draw our structure on like so, and we can see that we do have a clear high within the market, within this structure here, and we have a clear low. So these are our two levels. Now when we trade these patterns, typically we want to look for that third touch. So we'll be looking for something like this, and then for price to continue. Now again, we could trade that accordingly, and we could have our stops down here, or we can actually understand what's going on, and we can understand why it's happening. So we can see this break of structure that happens to the upside. Naturally, a big move like that is created by institutions, and they do leave orders behind. Now for me, this is our order block on the 4 hour. And again, don't worry if you don't understand how to trade an order block. We do highlight that, within our course, within our strategy and what we teach. So this is the order block for me. Now, if you wanted to trade this based off the higher time frames purely, you can still utilize the higher time frames, and you can still utilize smart money concepts to get a little bit more out of these positions. So it'd be a case of putting your limit at the top of the order block and your stop loss below the order block, and looking to target the highs like so. Now you can see that this is a drastic improvement straight away on that original swing trading method. You can see that instead of 4%, we can actually take a little over 17%, and that's purely just trading it like this and not going down to the smaller time frames and refining those orders further. So that is one way that we could potentially look to implement it if you do favor staying to the higher time frames. However, if I just play out a few candles and we do push into our level like so, you can see that we can actually drop down time frames to refine that and get it a little bit tighter. We can actually take even more out of these positions. So if we jump down to the hourly time frame, again, we can jump down all the way to the 5 minute if we really wanted to get a little bit more out of this. And what we like to do is now wait for a little bit of confirmation again, just like we did on the higher time frames, where we're now waiting for that change in structure in order to go and get involved in the position. And again, this is happening on every time frame. It's happening on every day of the week, different pairs, and it is something that repeats itself just like these patterns. So if I start to play this out like so, you can see that we do create a little bit of a high within the market there. So we know that we need to break that high, and we can clearly see now that has happened. So what we can do is just drop down to the 30 minute, for example, and we can take a little bit of a closer look at this. Now again, what we can see is the market was making lower lows, lower highs, lower lows, lower highs. And we've actually now broken our swing high to the upside. So this does suggest to me that we could now be seeing that changing direction. And then what we do is we look for our last bearish candle that we would class as our order block, and we'll now just delete our larger orders there just to make this a little bit cleaner. So now what we can do is do the same thing we would have done on the higher time frames, but just on the smaller time frames. So we can place our limit at the top of the order block there. We can bring our stop loss just below, and for example, that is how this setup would sort of look. If I just play this out now, you'll see we come and get tagged into this position, and we go and move to the upside really nicely there. It's a really great example of how this works. Now, if we jump onto the 4 hour, we can start to, play this out a little bit quicker. Now, if we now look at the risk to reward tool, and we bring this to the highs, we can see that this is now a 40% trade instead of a 1 to 4. So we've actually 10 times the kind of returns on this just by understanding, the pattern here, understanding where the order blocks is, and understanding how we look for those breaks in structure on the smaller time frames to get those tighter stop losses. So if I just start to play this out, you'll see exactly how this works. And again, there is going to be multiple opportunities to scale in as well, as we do have that higher time frame direction, that higher time frame target. We can just trade with the trend now at this point until we get back into these areas here. Now, as you can see, this is playing out really well. There's not really any chance or any reason, to kind of manage this too aggressively at this point. We're just letting price play out. We're letting the market move and do what it wants to do. If I continue to play that out, you'll see that eventually we do make our way all the way to target there for a 1 to 40. And like I said, you can refine this right down to the smaller time frames to get even more out of these moves. But the important thing to take away is, you don't have to trade That way, when you are swing trading, when you're trading longer term, you don't have to have a 100 pip stop loss or a 200 pip stop loss and target 1 to 3s and 1 to 4s. You know, you can understand a few concepts, and again, you can just drop them down one time frame. You don't have to go down to the 1 minute or the 2 minute or the 3 minute. You can drop down to the 4 hour to refine this process and still get, you know, 4-5 times more than you would trading that original way. So hopefully this makes sense. Hopefully you can take some value away from this as well. And if you would like to understand how we implement it and how we actually put that on our charts, do check out the website. You know, we do have an in-depth course and an in-depth strategy, as well as many other, you know, extra tools that will aid your trading. Or if you do have any questions, drop them down in the comments below, or send us a message on Instagram, just at The Social Traders. Make sure you leave a like, subscribe to the channel, and we will see you in the next one. Cheers, guys.